And you're watching The Pulse. I'm Maryam Nemazee. So Germany's goods and services have never been so popular. The rest of the world spent nearly 100 billion euros on its products in March, the most in history. And it came as quite a surprise. Exports jumped more than 7% in February. Economists had forecast an increase of just 1%. It's evidence that Germany's economy continues to thrive, while smaller members of the Eurozone struggle. Well, Volker Treier is Deputy Chief Executive of the Association of German Chambers of Industry and Commerce. He joins me on the phone now from Berlin. So record numbers for Germany here. How difficult is it going to be to sustain this sort of performance in the year ahead?
It's always difficult to sustain such a record path, I would say, but I'm quite optimistic that the German manufacturers are strong enough to stay on this path of really astonishingly high export growth. We have risen our competitiveness, and we have explored markets all over the world.
And what are the risks to this high export growth, export-driven recovery in Germany going forward?
One risk is, of course, the euro exchange rate value, the strength of the euro. But I have to admit that German exports are not that, or that the demand for German exports are not that sensitive, price sensitive. When we produce machines, then the customer knows that's not the price what is convincing. It's much more the quality. The higher risk is what's about the world economy, what's about the U.S. economy. It is struggling, or is it going on an upward trend?
Yeah, and when you speak about the world economy, I guess one specific concern that we hear repeated again and again is the prospect of a slowdown in China.
We are not expecting a substantial economic setback in China. Let's say a more moderate, slower growth path would be nice, because the inflation pressure is strong there. So what we are expecting is a more moderate growth, but nevertheless the German exporters they do not only export goods to China, they even are producing there, and they want to invest quite a lot this year in China. So they have explored the Chinese markets, and there's a high potential of Chinese demand for German exports.
Nevertheless, what might the more moderate growth in China in the year ahead mean when you combine it with a strengthening euro as well? What could that mean together for German exports?
Yeah. We are observing right now that the European Union, as a destination, a target country of German exports, is going more and more out of the crisis, and this is much more important compared to China as a target market. We are exporting a bit more than 5% of our goods to China, and we are exporting more than 60% to the European Union countries. So therefore, it is nevertheless more of our interest that Europe is coming out of the crisis, and we see that this is the case right now.
Nevertheless, a great deal of concern about the instability, about the fear in the markets, European debt crisis, a big risk, a big story obviously in this region. How do you expect that to impact on Germany?
You have mentioned that it's a European debt crisis, and it is not right now a crisis of the euro. The euro is very strong, but it could be even stronger. So therefore, I would say that that crisis had its influence to the euro strength, and the euro strength is not, the euro is not that strong as it could be. So therefore, from an exporter point of view, right now, the debt crisis has its negative impact, but even a positive. And the positive is that the exchange rate value is not that unfavorable for German exporters.
Interesting. Really good to get your thoughts. Thanks so much, Volker Treier of the Chambers of Industry and Commerce. Thanks very much.